We greatly appreciate John Paul taking the time to be with us today. He's been at the Trading Pub before. I'm going to give him a second to get his slides loaded. And John Paul is from DayTradeToWin, and he's going to be talking about trading price action during the summer and in any market. So John Paul, at this time I'll turn it over to you if you want to do a quick sound check. It looks like your slides are loaded. If those of you in the room for some reason are having trouble seeing his slides, you should just be able to click on desktop sharing. So John Paul, I will turn it over to you in the next 30 minutes. The room.
All right, thank you, Chuck. Very good. Do a quick sound check here, making sure everyone here in the room can hear me and can see my slide here. All right, sounds good. Thank you, guys. Thanks, Dave. Morgan. All right, most of you know that I really try to concentrate the style of trading that I do on price action, right? So what I'd like to do today is give you specifics on how to trade a specific method of price action, which I call the ABC pattern. I'm going to give you exact entries, stops, all the good stuff. Now, the good thing about trading price action is that you can trade it on any market. You can trade it on any session. So some of my clients are based not in the United States, so it's difficult for them to trade the US indices, so they like to trade the London Open, the Euro, the Australian dollar, Swiss franc, Euro stocks, and so forth. So when I look at trading as a whole, I really want to concentrate and boil it down to looking at price and trading it on any market. And if I can do it on the London Open, which I should, then it's there for you as well. All right, so I have 30 minutes, not a lot of time. One thing that if you enjoy this presentation, I have free educational videos that you can watch, which will teach you how to trade the news, more on this ABC pattern, how to look at the average true range to trade, and this is all free on my website, DayTradeToWin.com. I invite you to join up. It's free, as well as check out the blog. There's over hundreds of videos on me trading live, me trading the methods, and so forth. And if you have any questions, please feel free to email me at support@DayTradeToWin.com as well. Now to begin, just a quick disclaimer. I want to make sure that everyone understands, obviously, trading is risky. Please don't trade with funds you cannot afford to lose. If you have any questions on this disclaimer, please don't hesitate to ask me and I will explain it to you. But obviously, as traders, we know that there is risk involved. I want to make it clear. All right, what is today's webinar going to include? Well, price action trading, how to follow the price. I want to show you guys how to follow it and to trade it. I'm going to show you the ABC pattern and how it's traded with specifics. The entries, the exits, and the stops will all be explained and disclosed. I want to show you the ABC pattern on different markets. I'll share my charts with you as well for today and for yesterday in different markets and for different trading sessions as well. And I'm going to show you how we think of as traders, especially when looking at indicators, when thinking about trading with indicators. I just want to make everyone aware of the difference between trading price and then trading by following some type of an indicator like a moving average or stochastic or MACDs and things like that. So I'm a true believer that everything you ever need by way of understanding what's happening is being displayed to you on the chart as you see it. So I think it's unnecessary to use additional indicators, especially those of you who may have 5 or 6 indicators on your chart, all trying to align the stars and the moon until everything aligns perfectly. I think that all you really need is the chart. Having a blueprint is actually something that is very important. So every time I look at the market, I want to know, where am I entering? Why am I entering? Where's my stop? Where's my profit? Each time to execute the trade properly, I have to have a blueprint. So don't trade without having one. Now, trading price action is really how successful traders do it. Nothing else matters. I've never seen on the floor of the CME anyone say to each other, hey, where's that Bollinger Band, or where's that 50-day moving average? They really could care less. The only thing that matters is time and price, and that's very important to understand. Another aspect of trading is following what the price is telling you. A lot of traders look at the chart and they see it go up, but they hesitate and they don't do anything. I believe that if you follow what the chart and what the price is telling you, you're much better off. So getting right into it, the ABC pattern. How to trade the ABC method? Well, in every market, think about the E-mini, think about the euro, think about the Australian dollar, any market that you like, think about this pattern. Think about the A part of the day, and I'm going to outline this on a E-mini S&P. So this is for the Eastern Standard Time Zone. These times, please adjust these times for your time zone. If you're international, if you're Central, Pacific, Mountain. Think of the A part of the day as the first part of the day, from 9:30 to 12 o'clock Eastern Standard. Now, if you live in California, it would be from 6:30 to 9 o'clock. So essentially, it's the first 2.5 hours of any market. That is the A part of the day. Think about the middle part of the day, the B part of the day, as the next 2.5 hours, starting at 12 o'clock to 14:30. And then think of the C part of the day, the last part of the day, as 14:30, or at the end of B to the closing of the market, of that session. So we're outlining the day into three parts, A, B, and C. Now, what's normal, typically, and this occurs in every single market and any session as well, what's normal is that price trades within the range of A, the first part of the day, about 85% when it comes to the B. So if you outline the range of A, the first 2.5 hours, when B rolls along, I expect 85% of the time for the market to get stuck there. Now, when it doesn't get stuck there and it continues higher or lower outside the range of the A part of the day, then I have something. Then price is doing something that it typically does not do. It's moving higher, it's moving lower. It's actually starting a trend. And if you're able to identify a trend as early as possible within the trading session, you're going to be much better situated knowing what's to come. And in these examples, 15% of the time is typically the trending days that we have throughout the year in any market. So if you're always thinking about where's the trend, do we have a trend, and so forth, think about identifying it with price, having some valid setup that says, okay, here we go. It's breaking outside the range of A, the first 2.5 hours, and here we go. And I would expect the market to close higher, or at least some profit taking to be able to occur as soon as it breaks out. All right, I'm going to show you some examples of that. So here we are, the first trading day of the year. January 3rd, everyone wakes up, everyone is excited, the holidays are over. What do we do? Well, this is what occurred on January 3rd. Now, if you outlined what happened in the A part of the day, outlined the B part of the day and the C part of the day, you're going to see that early on we're able to find out whether or not we have a trend starting out. And so here, this box that I have here is from the session open 2.5 hours later. Okay. Now again, I have to say that it doesn't matter if we're looking at the E-mini S&P. It can be any market. It really works the same way. And it really doesn't matter as well if you're looking at a London Open. London Open would be 3 o'clock Eastern Standard, it really wouldn't matter. The same exact process occurs in every market. So we have the A part of the day, the first 2.5 hours. What I'm looking for something different. I'm looking for the market to do what it usually does, so I have validation that I'm expecting it to get stuck within this range, or I'm looking for price to break out of it. And when price breaks out of the range of A, here I have an opportunity. The opportunity to go short or to go long if it gave me a closing price above the high of the A part of the day. That's my opportunity. Now the rules are very objective. What I'm looking for is two consecutive closings above or below the range of A. So what I'm looking for is something very specific. Some traders say, why not one bar? Well, one bar gives me a false breakout. Two consecutive closings is my proof. Remember, I trade price. I'm not interested in Bollinger Bands or Fibonacci's or Gann or anything like that. I'm looking at interpreting price. I'm also not interested in candlestick interpretation. What I'm interested in is where the price is going, show me kind of deal. So as you can see, this is a great way to know where to enter and why. Most importantly, why. So I'm entering at the close of the second candle, and for those of you who haven't seen the videos where I use the average true range to tell me what my profit target is, I invite you to visit DayTradeToWin.com and get the 3 free educational videos which will teach you how to utilize the ATR, how to use the ABC, how to trade news, all that good stuff. But basically I'm using the ATR to tell me what my profit target should be based on the current market conditions. Now Sam has a question here. How do I treat currencies? Same exact way. The session open, Sam, wherever that session open may be, whether it be the London Open, the Asian Open, you're going to put that as the A part of the day, the first 2.5 hours. As soon as the first 2.5 hours are over, you're going to look at the next 2.5 hours as the B part of the day, and if it breaks above or below in the B part of the day, you have yourself a move. You have an entry. All right, Sam? Russ, I am using a 5-minute chart. For all the methods that I teach, I concentrate on a 5-minute chart. 5-minute chart is actually a derivative of all the defaulted times that you see on your charts. So if there's a move that's about to occur on a 60-minute, a 30-minute, a 15-minute, a 10-minute, 5-minute, I'm prepared with a 5-minute chart to catch that move. And that's the reason why I use a 5-minute chart. There may be a lot of traders out there, some of you as well, that look at a top-down approach. You guys look at a 60-minute, 30-minute, 15, 10, 5, 1, and you're looking for that complete alignment of everything. And unfortunately, I think that causes some confusion. You don't know what to do, or the move may be over at that point. So if you look at just one chart, trading is difficult. It's not easy, but we have to simplify it. The more stuff we see and we have, it's overload. All right. Russ, Ken says here, you needed to specify a 5-minute bar, otherwise 2 30-minute bars would not work. Right. I'm using 5-minute chart. Exactly, Ken. All right. Now I'm going to show you the following day. The following day, January 4th, what do we have? Well, we have the A part of the day here, and we have a close outside of the A part of the day. Trying to identify a trend as early as possible positions yourself much better. All right? So 2 consecutive closings. Outside, I am long. All right? Now, one thing that I want to bring to light here, because Many traders skip this part. First, I want to see the actual breakout occur as early as possible. So if it occurs closer to the end of B or closer to the end of the 2.5 hours, it's no good. It has to occur like a push. We have the A part of the day, and then it just keeps on going. Remember, this only occurs 15% of the time, so when this occurs, it's very strong. What I expect is the market to get stuck within this range 85% of the time. So within the first hour and a half, this has to happen. If it doesn't happen within the first hour and a half, it's finished. This is not going to work. Okay? Mario, is the area before the box the pre-market? It is. The area before the box is prior to 9:30, correct. So I'm looking at when the market opens at 9:30 to 12 o'clock, 2.5 hours later, or from 3 o'clock London open to 5:30. That is my first 2.5 hours of the session. Okay. Now, let's look at a day where this is typical. What's typical is this. This is typical. So what we have here is the A part of the day, and then we have B. B being contained within the A part of the day. So this is what's typical. Now, you can play this as a support and resistance. You can play this as bouncing off the lows of the day. You can call it whatever you want to call it. All I'm saying to you is I expect this to occur. So if you do want to look at this and say, okay, it's bouncing off the lows, it's hitting off the support of A, it's bouncing above it, fantastic, you can. But I have something even better than that. I have the relationship that I just showed you between A and B. I am going to show you the same relationship that we can now include C into the equation. So now I take the range of B, the middle part of the day, and what I have are two consecutive closings above that. I look at my ATR, my average true range, to tell me what the current conditions are, to tell me exactly how much profit I'm taking. I'm in, I'm out, I can hold it, I can trail a stop, I can do whatever I want, but as long as I have proof, I know exactly what I'm doing. Ken, you clear on that? Now, another thing that I want to show you is the relationship of consecutive days. Okay? The relationship of consecutive days of the market trending is very important. I want you to think about what the newscaster on TV says, or on the radio, or whatever you listen to, says. He says, the market today rallied 200 points, right? Dow Jones rallied 200 points. And because Apple did this or something occurred with Facebook, whatever the case may be, the market rallied. The following day, the same commentator says, and the market dropped 200 points. Now, the reason why that occurs, and what they always say, is that this occurred based off of profit taking, right? You've heard it all the time. And the market dropped based on profit taking, right? Now, the one thing that they completely leave out of the equation is that both of these days, back to back, were trending days. So if you go back to January 3rd, and look at the market having a trend to the downside, the following day, we had a trend to the upside. So I want you guys to leave out of the equation the direction and just concentrate on, is the price going up? Do we have a trend? Is the price going down? Do we have a trend? And are they consecutive? And if they are consecutive, you're going to have a few days of this. So if you look back on January 3rd, January 4th, January 5th, they were all trending days. They work in concession. And the same thing if you look at groups of days that are tight or range bound, they also work in a grouping of days as well. So this can prepare you for the following day. If you had a trend today, tomorrow you can expect a trend, just wait for the setup and for price to prove itself. Okay? Sure, Ralph. Ralph says here, is it possible to recap the start and end times of each session? Yes. First, if you look at the A part of the day, it's from 9:30 to 12 o'clock. And by the way, if you miss any part of this, you can always download the free educational videos by visiting DayTradeToWin.com and signing up, and you get the 3 videos where you can see this and other methods absolutely for free. The first part of the day is the A part of the day. 9:30 to 12 o'clock or 3 o'clock London time, or I should say London Open, 3 o'clock in the morning Eastern Standard to 5:30. It is the first 2.5 hours of the day. All right? Ralph, the B part of the day is directly following it the next 2.5 hours. So from 12 o'clock to 2:30. 12 o'clock to 14:30. Okay, 14:30, 2:30, the next 2.5 hours. And then after that, we have, here's the A, we have the C part of the day, which is wherever B ends, which is 14:30 or 2:30 p.m. Eastern Standard, till the close. So the C part of the day is actually smaller, but I'm still looking at this same relationship to occur. All right? Now, Stefan, so do we enter in time B or C? Both. Both. That's the beauty of it, Stefan. You can enter if there's a breakout outside the range of A, or you can I should say, both. If there is a late day rally or late day sell-off, you can take it in C when you compare it to B. So you can take both as long as price proves what you see there. All right, Stefan? Okay, very good. That's correct, Diane. You look for a breakout in C in relationship to B. Absolutely. Absolutely. Okay. Now, if you want to see other markets, let me see if I have here here's a Euro chart right here. Okay. And right there. So here we have a Euro chart. This is today. Nothing changes, right? Let's go to $30, 12 o'clock. Here is A. One, two, outside the range of A, right? This is A here. And this is B. Can you see the opportunity, not only the proof, but the understanding of why we're doing what we're doing? Now, one of the things that I don't have a lot of time left, guys, only about 7 minutes left here, but I do use the average true range to tell me what's my profit target. So if you look straight down here, you see that the ATR is roughly 8 ticks. That's where you should start off with your profit target based off of 8 ticks. 8, or let me just take a look here, 8, 9 ticks. And then you can trail it from there. But what this is telling me is that a trend is happening. That's the most important part of what I'm teaching you today. Identifying a trend early using price. You're welcome, Diane. Chuck, does it work specifically on 3 periods of the day, or can you use 4, 5, 10? It's only 3 periods of the day. The first 2.5 hours in any market, first 2.5 hours, second 2.5 hours. This is the only way that it works. Good question here that says why, Ted, right? Why? Why this works, Ted, is because as soon as, and I'll give you a little bit of understanding of what's happening here. As soon as the market opens, what do you have? Systems, you have position traders getting in, you have systems getting stopped out, you have gaps that are all kicking in. So you have a lot of things. That are actually occurring as soon as the market opens. But unless there's a reason, unless there's a specific reason for the market to continue up or down, it dries up. So what you're seeing here is a drying up effect that as the day continues, and you can look at this, look at the range of the bars as soon as it starts here. Okay. And slowly the range gets smaller and smaller and smaller because there's no follow through. So the reason why this is occurring is because there is no follow through. You've heard it probably said, lunchtime, don't trade lunchtime. Well, it's not really because of lunch, right? It's not really because of lunch. It's because you have everyone waiting for something to happen for them to get out or get in. But when there's a trend, there's something else fueling the market. Maybe news, it may be something else out there that's fueling the market for more buying or more selling, and that's the reason why I'm taking the advantage of that. All right, and if you want to look at it in the overnight, which is 3 o'clock in the morning, where is it here? 3 o'clock, here it is, 3 o'clock, London Open, right? I live in Florida, Eastern Standard Time Zone. I'm sleeping at this time, but some of you may want to be trading at the London Open if you're in the States, and therefore 3 to 5:30. Here is the range that it was created, and exactly as my expectations, price gets stuck within the A part of the day. I have here from 5:30 to 8 o'clock. I have the B part of the day, which is right here. Right? And then I'm looking for a break above or below to do something as it then opens, the US Open occurs. All right? Tea, lunch, and afternoon tea. Stefan, if that works for you. Maybe coffee for me in the afternoon, right, to keep me going. Not tea. Carter, so you expect always to retrace the move. So you expect to, well, what I expect, not really retrace, Jay Carter. What I expect is for market to get stuck. I don't expect anything more than the market to get whatever price is doing up and down and up and down. I expect it to be contained within this range. It's only when it does something else and it pops above it or below it where I can say we have some type of a trend in motion, and it actually fuels the market. If you haven't watched that Trading the News video, I think that you guys really enjoy that, how to trade the news a little bit differently, how I do it compared to maybe how some of you may be doing it. All right. And we can use the high and low of the A box as support and resistance. Absolutely, you can, without a doubt. Within the B time frame, absolutely you can, Mario. Absolutely, like trading at big channel, right? Chuck says here those traders don't work three shifts. All right, very good. Now I don't have a lot of time left here, so let me just continue here. Again, if you missed any part of this, feel free to check out the DayTradeToWin.com. Get the free videos just by joining my email list. I have a weekly newsletter that gets out for free. Hundreds of videos out there. I think everyone will enjoy it. Just to outline the rules here one more time. And when I think about how the pros trade, just remember to take away the actual moving averages that everyone is using and put them aside. Now for the Memorial Day weekend, some of you have asked me this by email. I always try to do coupons and things. Use the coupon holiday, take 15% off any course. All the courses are price trading only. Remember, May 31st, the coupon expires. If you have any questions on the ABC pattern, please feel free to email me, support@DayTradeToWin.com, or watch the videos. I think you guys will like it. It works on everything, Ralph. It does. All right? It's separate, standalone. All right, Chuck. I think I have about 15 seconds left. Hope you guys enjoyed the webinar. Have a great trading week, guys. You're very welcome, guys. Mario, Ralph.